Hey everyone, welcome back to Fiscal Voyage. My name is Felix, and for those of you who know Buffett, Warren Buffett, and follow him and follow his purchases and sales, I'm pretty sure you guys are aware that he purchased or opened a new position in Ulta Beauty, and I too opened a position in Ulta Beauty, but this was before the release of his Q2 purchases and sales. So if we go here to Warren Buffett as a tracker here from Daily Trade Alert, you can see here in Q2 they reported 814. Berkshire Hathaway bought Ulta Beauty. This was a new position for the company. They bought 690,000 shares of this company. And if we go to the charts here, let's do this one. The Q2 time frame would be more or less around here, the end of March, over here right before this drop, and then right here ends. So this right here is Q2 more or less. Let's move this here, kind of like right here, Q2. So he bought it over here. I'm not sure the exact price because that this site doesn't show the exact price he bought it, but I'm sure you guys, I'm sure there's somewhere there the exact price he purchased it. But it's anywhere from this price from 375 all the way up to 469. It's probably over here around the $400 area is where he bought it, $375 to $400 area. So and the report came out on August 14. So that was around here, this day, August 14. And then when the news broke out, the stock jumped dramatically, from 330 all the way to 370 or so. Yeah, 370 the top, and then now it's at 372, and it looks like it's gonna go higher here. But I purchased this, before August 14 when the release. You see here August 8th, and on the 5th or May 21st. You can see here I purchased 4 shares at 1,500 and another 4 shares at 1,300 commission. This is my interactive account here, and you can see that I purchased this before the August 14. This price 183 and 327. I'll show you why I did that. Let me remove this here. So we go here to the monthly. So I bought it at 383, so that's around right here. So I bought it because of this right here. There's good support right in this area. So I was like, ooh, it might bounce here, right? Because this is good support, and the fundamentals that we'll talk about shortly looks good at this price at 380. So that's why I bought it. So if we do this right there, you can see this is a strong support area in this range. Support here, took it higher, came back to that area and took it higher. So I was kind of expecting the same thing, and we're in this monthly moving average, the 50 moving average. If you follow my videos, I like the monthly and the 3-month moving average, the 50 and the 200 for my purchases. And you can see here how it bounced here, it bounced here, over here during the COVID. It was messing around it. A great buying opportunity still, even if you bought it here and it dropped. That's okay, because we buy and hold for the long term. But so I kind of thought the same thing is gonna bounce in the moving average, and it didn't. That was my first 4 shares of purchase, and then the reason why I bought the next lot is because of this right here. There's another strong support area right in here, in this area. And I got a 320 around here. It's because over here is strong support here as well. So I was like, oh, I'm gonna buy more shares because the company is undervalued, and I'll show you why fundamentally. And that's why I decided to buy more shares. And then my next lot, if it were to continue to go lower, would have been around the 300, or let's see here. Let me see if I see it on the 3-month. Yeah, 300, 260. This will be my next area right here, the 260. Where I would have purchased more shares because of the 3-month moving average right here, 275, 260. I would have purchased more shares, and that's where I would have gone full position. But we go to fast graph and look at the fundamentals of the company. You can see here earnings are expected to be lower than previous year in 2024 compared to 2025 compared to 2024, but they're expected to bounce back very nicely, 10% in 2026 and 8% in 2027. So I like that a lot. And you can see here, if the company were to revert back to a normal multiple of 26, which I don't think it deserved that kind of multiple. I'll explain why shortly. You have an annual rate of return of 36.5%, which is outstanding. But I think this stock should be around a 20 multiple because it's not the same grower as it used to. The company is matured, and you can see here back in the previous years, you got 64%, 41%, 20%, 26, 25, 31. You see high growth in earnings, so that kind of why it drove that 30 plus multiple. And obviously the 22 multiple on a 30% grower is outstanding. But we're getting a 14, 15 PE currently with a 10% annual growth rate expected. You see here forecasting, they're expecting 6.5%, and the estimates here 7.2%. So that's why I tell you it's not. I don't see it worth the PE of 28, 30, but definitely a PE around 18 to 20, and we have a PE around 14.5. So this is why I bought shares of this company. And I think this is kind of the reason why Warren Buffett bought shares as well. Operating cash flow looks good. The company doesn't pay dividends, but operating cash flow, they have the cash to pay the dividends. Let's see your free cash flow here as well. Free cash flow looks good. So this company could definitely start paying dividends. You can see here they've been positive free cash flow to pay dividends if they wanted to. So that's great. So this is all the reason why I like and bought shares of this company. And we go to Morningstar. You can see here they give it a 3-star rating, which is a hold. And we go to the analysts here and what they kind of expect from the company. You can see here at this point here it was undervalued. That's kind of like where we're buying shares. Right now it's at 365 and it's near that fair value price of 4 or 5. So it's still undervalued based on Morningstar fair estimates of 4 or 5, but they give it a 3-star rating. But you could have got a 4-star rating or close to it, when it was around that 320, 330 area. And another thing we want to look at here is the future estimates to see if it coincides with fast graph. You can see here revenue is expected to grow 6.4%, 6.5%, which is good. You want to see revenue to continue to grow. Earnings, you can see here earnings are expected to grow, which is great, from $25 a share, $28 a share, to $32 a share. So all that looks great. And you can see here revenue continue to grow year in and year out. Trailing 12 months right here, 11.3, which is higher than 2023 at 10.21 billion. So that looks good. CFRA gives a 3-star rating as well, which is a hold, and with a price target at 441, which is under today's price, which is 372. So it's a hold, but they gave it 3-year earnings growth of 13%, which is higher than what we saw in fast graph. But again, here earnings are expected to continue to grow year over year. Revenue continue to grow year over year, and it's undervalued. That's the reason why I purchased share. And the fair price here for CFRA is 534. So give it a 5 rating, which is very high rating for undervaluation. So this is why Warren Buffett and myself bought shares of this company. And I love the business. The makeup business is crazy. As you guys know, if you guys have wives, girlfriends, or female friends, it's all makeups. And I want to own companies that sell makeups. So I like this business a lot. Simple business and a business that's understandable. So that's why I purchased shares of this stock. So again, if we go back to the chart, you can see here the monthly chart on Ulta Beauty is looking very nice bottoming tail. So it should go higher. But my next time I purchase more shares, if it comes back to the $300 area. If it comes to $300, I'll buy more shares, maybe another eight shares worth, and the next level will be around the 200, 220 area is where I'll kind of load up in shares, because this is it's the beauty thing, and to me it's just going to continue to grow as third world country become more developed and people start making have disposable income in third world countries. Those women are gonna buy more makeup, so they're just gonna continue to grow and grow the makeup industry. So that's why I like Ulta Beauty as a a company to get in that space. So overall the company looks great. They had a dip here in 2021, like most companies did during COVID, which is understandable. They had to close their stores and stuff like that, so sales dropped and stuff like that. But they still made a profit, which is great. And then they bounced back very nicely in 2022 and 2023. So I'm expected to continue the company to grow. And right now, it's not a great buy right now, but it is still a good buy. If you're interested in buying shares of this company, it's still a good buy. I wouldn't go all in at current price, but definitely maybe a quarter of a full position for your portfolio. Definitely at this price would be good. So if you guys are new to the channel, make sure to hit that subscribe button, and if you like the video, make sure you hit that like button as well, and leave in a comment below what you think of this company. Did you buy shares when you saw the release of Warren Buffett, or you're holding back? What is it that's holding you back from buying shares of this company? So thank you for watching, and I'll see you guys in the next one. Take care.